if we're talking price action and momentum and formation analysis, then there could be some more downside faced for AMC in the coming sessions. Let's go ahead and verify. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with an AMC technicals, raw price action, and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. So we are looking at AMC here in the 12-hour chart, and this is the ascending channel that I actually presented days ago. I'm not covering AMC as often as I could be, but we're actually checking it from right over here a few days ago, and we did notice that there was the potential to where we're riding two ascending channels per this trend line here and the bottom of the channel here itself, since we were exposed to these two candles matching very well with these candles right over here, okay, and this one as well. So the price action has realized what we said. So it did, you know, per this triangle here, which is usually considered to be a falling wedge. We took a trend line from this top wick here, from this high wick to the very lowest point of the triangle, and we placed it at a place to where we could break out, which was actually right over here. So on that breakout, you can see that the candle actually reached the price objective spot on. So it has faced a capitulation event per our expectations. Now, what we didn't know whether we were going to find a bounce from this 1.618 from the bottom of the triangle or from the bottom of this channel here, which was essentially the entire warning of everything. So at this point, it did end up using the 2.618, which had confluence with our channel support, and has since bounced. There is, however, it looks like it would be hopium here, because people are bouncing from this support bottom, expecting a continuation to the upside, but I don't see that to be the case. Usually when these ascending channels realize their true nature, it happens after the third test of the resistance, following the golden rule of three that we talk about here very often. In an ascending formation, usually you get test number 1, test number 2, and then the test number 3 usually presents the failure or the succeeding of the short position. So short positions get signaled on that third test of the ascending channel for a massive downside. So usually after that third test, the ascending channel would entirely be invalidated with a continuation to the way down. Okay, so this is, first of all, that's the warning that I have to give you. Let's go ahead and move on to the next chart. Okay, so this chart is the statistics. The statistics are suggesting an upside. However, the upside is very much contingent upon meeting a certain criteria or setting a certain condition, that the condition is very close to be setting, but it isn't quite there yet. Now, I ran a back test that is actually of volatility, sorry, versus momentum. Okay, so in this case, new viewers, new listeners, volatility is here what you're looking at, represented by this indicator BBWP. Volatility is direction neutral. So in order for us to gauge a bias for direction, we pair it with an indicator similar to this one here, which is stochastic momentum. It's proprietary to TradingView software, which, by the way, the link is in the description below if you would like to consider joining. That actually helps me to start an account and stuff like that. Okay, so yes, in this case, momentum is still suggesting a continuation onto the downside. I'll get to this blue line shortly. Okay, in this descending channel, usually the descending channel poses an upside. Okay, so this is essentially a trend reversal signal. However, like I continue saying, it does need to meet the golden rule of three. In this case, for descending channels, the upside is the objective here. Okay, so after 1, 2, and 3 tests of the resistance, usually after that third test, short positions open here and continue on or sell this all the way as far as they can. Okay, so I mean, this it's just per the playbook rules. Is what I am noticing here, however, in a form of hopium, is that as you can see, the candles are large, and they're starting to get smaller and minimizing as they're coming down here. Usually, that signals a potential loss of strength from the bears. Okay. Also, if you see very closely here, I'll make this stochastic indicator large so you can see this right here on the moving averages of the stochastic momentum. It looks like there is potentially a kink, and that could also be relieving some of the sell pressure. Okay, so the reason why I have this line here, and the reason why I'm mentioning to you this hopium, is because of this. If we zoom out through so that we can view the entire trading history of AMC per these iterations, you can see that we're already at a historical low. So there's already lows here that we've actually retraced from. For example, this iteration right here, we have used it to retrace into a newer high. This iteration here also retraced, suggesting an upside continuation. This iteration here, upside continuation. This one here with an upside. So there are many iterations to where we have retraced from this moment, from this spot here, from this percentile, which is about the 4.79%. So this is already incredibly oversold. Stochastic momentum is similar to an RSI, so we can use that. So it's okay for us to use that jargon. Okay, so now let's close off this indicator and explain the criteria for the upside move. So the metrics that I actually took were based on the upside thrust. Like this is a better example. So based on the upside thrust of the iteration, wherever we have reached contractive levels below this critical loading zone, which I consider to be below the 15 percentile. So anytime the volatility has reached below or at this area, I have taken note of that iteration's upside thrust, the duration of the iteration, and also the amount of times that the iteration has guessed the upside correctly versus indirectly. And I am speaking specifically with a momentum versus volatility profile. Okay, so upon the back test, the metrics came back with interesting results. So out of a total 47 iterations that have been noted by hand by me throughout the entire trading history of AMC asset in the daily chart, out of those 47 iterations, 27 have been correctly guessed towards the upside, giving us an averaged upside accuracy of 57.45% with an averaged upside thrust of 44.69%. The last iteration was actually just recently. I actually told everybody here that we're facing a potential 50% move to the upside, in which it actually realized almost to the penny. Okay, and also the fact that we were in a descending channel and we were at a critical support level, that was also a dead giveaway. Pardon me. Now, if we're looking at the conditions upon the firing of the signal, which is usually the signal firing off would actually be when the momentum when the volatility component of the BBWP starts making its ascent and makes its move above and beyond the 15 percentile alongside the moving average, represented by the pink line. That is the official firing of the signal. So upon the firing of the signal here, when we started moving to the upside, we were able to catch that 48.91% move to the upside, landing us directly to the closure of the candle here. So I am doing this metric on a closing to wick high basis of the candle. Okay, so now the stochastic momentum is suggesting a continuation to the downside even still. Okay, so the pivot, yes, it is happening, but the firing of the signal and our potential move to the to that 44%, to that 44.69% is contingent upon having both the volatility component and the moving average both pivoted to the upside and beyond the 15 percentile critical zone, and the stochastic averages corrected and pitched up to the upside. I have back tested the momentum indicator before by itself, and it has given me a 75 to 91% average read in guessing the asset's direction. again, not perfect, but very good to consider. Okay, so we do need that criteria to be met. We do need the stochastic momentum to pitch to the upside alongside volatility still continuing its expansion phase towards the upside. Okay, so we do need both of them expanding. Now let's go ahead and move on to the last part of this analysis, which is the RSI. In this case here, these were the phantom drives of bearish divergence that we actually caught before making this downside move here. Okay, so now what we're looking at as a fresh print, and could actually be in process of making a few other prints, is the fact that we have 1, 2, 3 drives. Yeah, we do have. Yeah, so we do have 3 drives of phantom bullish divergence. So phantom regular bullish divergence. Divergence usually is the opposition of price action versus momentum, and momentum represented by this indicator, relative strength index, RSI. Okay, so in this case, we do have 3 primary prints of regular phantom regular divergence. So this is bullish divergence. So this is a good sign. But however, you can see that the 12-hour RSI is still suggesting a continuation onto the downside, and it's now very well in the grips of the bear strength percentile, suggesting a continuation to the downside, even still. Okay, so now let's go ahead and load a multi-pane so we can gauge a closer bias for direction in the immediate short-term time frame to medium term. Okay, for the new viewers, for the new listeners, I have a diagram here that I've made for you of my RSI zones. Okay, so these are the 4 zones that I want you to focus on, which are located right over here on the RSI. Okay, so let me just minimize this just a little bit so that we can continue. Okay, so in this pane, we'll load the immediate short-term time frame of 30 minutes. Okay, 30 minutes is suggesting a continuation to the upside. Now, the upside continuation is actually sitting, or the suggestion is actually sitting at the very deep areas of the bear weakness percentile. When we're in these deep areas here, that usually means that we're going to be gravitationally pulled right back in to the opposing zone. So we can't give this too much credit just yet, and also for the fact that it's a very short-term time frame. So 15-minute is suggesting a continuation to the upside as well. Now, this could very likely be a short-lived move before finding a rejection at a relevant resistance. Okay, so if we were to look at a relevant resistance, there could be upon the high of this candle here, it could be $6.18. So between $6.18 and $6.40 could be an area of resistance before a continuation to the way down. Okay, so now let's look at the bi-hourly RSI, as it is now starting to show more of the nature that we're talking about. It is sitting well within the grips of the bear strength percentile, suggesting an upside continuation. However, the pivot is very weak. It's not so upside and significant like this one here on the 15-minute. Okay, so this is while we're in the deep areas, or the for sure grips the grips of the bear strength percentile, we're likely to find a continuation to the downside. Okay, so now the 6-hour RSI is still suggesting a continuation onto the downside. The moving average, represented by this pink line, is still suggesting a massive downside, and the purple, which is the RSI signal, definitely now entering the grips of the bear strength percentile. So downside is suggested by this momentum indicator here. And now the daily, since we already saw the 12-hour divergence chart, has now entered the bear strength percentile. However, it is in the shallow areas of the bear strength percentile, which likely means that we can be gravitated into bear weakness for a short-term move to the upside. Let's look at the bi-daily. So the bi-daily is starting to weaken as it reaches the deep areas of the bear weakness percentile. Sometimes this can actually lead us to continue on to the downside. Let's look at the 3-day. 3-day is now entering that deep area too. Okay, you guys. So yeah, I definitely see a very short-term upside before a continuation to the downside for AMC. I don't want to be right about that. I'm actually still holding my AMC. I still have a bag. So, but if we start to present new lows, then I'm going to just add to my bag. Okay, please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment. Okay, I need you to do your own DD and we'll be okay. All right, you guys. So I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community and visiting me on Twitter. those usually we discuss more about these plays in the Discord. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, like I said, the links are below. But I wish for now, this is a good place to sign off. Actually, all right, you guys. So I wish you well. I wish you a great rest of your night, and I will catch you at the bell mañana. Adios.